For a while now, SaaS has been among one of the fastest growing segments in the tech arena for a variety of reasons, including reliability, accessibility, and cost effectiveness, with costs spread over the period where value is received. Hailing from companies that provide markedly different service offerings in the SaaS domain, come here the viewpoints of our panelists. Our speakers are Tom Richardson, Head of Startups and SMB, APAC and Japan from Stripe, Rob Taylor, Head of New Markets from Zoom Video Communications, James Perry, Managing Director of Citi. Please welcome our panelists and enjoy the discussion.
Fantastic, and thank you very much. It's great to be here, everyone. It's an honor to be back at the Wild Digital Conference. It's been a couple of years since I've been hosting panels. So as introduced, today we're talking about SaaS, so with us today, Tom Richardson from Stripe and Rob Taylor from Zoom. 2021 has been a great year so far for SaaS IPOs, with $16.5 billion raised in just the 20 largest IPOs so far this year, with AppLovin at $2 billion being the biggest. Out of that top 20 list, 16 of them are US companies, but increasingly companies from Asia in SaaS are making their mark. Out of that 16 companies in the US, one of them is Freshworks, which was originally founded in Chennai before moving headquarters to California. And 2 out of the remaining 16 are Chinese SaaS players, Yidu Tech and Klupin. Now, over the past 10 years, the tech story in Asia has largely been about consumer internet, with companies like Alibaba, Tencent, ByteDance leading the headlines. But today in China, enterprise SaaS companies with business models that are often tailored for the Chinese market have been solidified as the next generation target for investors. Now, moving here to Southeast Asia, the fundraising buzz again in 2021 has been focused on consumer internet. That being said, over $1 billion already this year has been raised by SaaS companies led by Trax and PatSnap, with the 2 largest fundraisers already this year. With that, why don't we turn to our panelists and Tom. Stripe, with a last round valuation of $95 billion, that's clearly no longer a startup. However, many of the companies that you work with across Southeast Asia are startups. In digital payments, I'm sure that just like in fundraising, most of your clients are consumer-centric. But how have you seen enterprise SaaS startups that you work with every day evolve and grow over the past few years?
Yeah, it's a really interesting question, Jim, and obviously delighted to be here like you. I think some of the really interesting trends happening in relation to enterprise SaaS currently revolve around rather consumerification of enterprise SaaS. And in particular, one of the really interesting dynamics that we're seeing at Stripe is that the expectations of B2B buyers and enterprises as it relates to their software have significantly increased in terms of user experience, in terms of design, in terms of making those software products really easy to pick up and use from day one. We have perhaps a legacy vision of enterprise software as clunky and difficult to implement and highly powerful. But these days, that's not really going to cut it anymore. And there's a new expectation in the enterprise that, as Rob will no doubt share, in line with Zoom's success, there's an expectation that things are easy to pick up and use, whether you're an individual consumer or an enterprise. And I think what's driving that really is the change in the way that businesses are buying software. So famously, Oracle's business model for a long time was kind of based on the kind of centralized IT procurement and locking people into long 3 to 5 year migrations onto new platforms. But what we're seeing increasingly is that businesses are buying SaaS in a much more agile, adaptable way, where they're testing and learning with new products. And so it doesn't necessarily make sense to focus all of your efforts on a highly complex migration process with sponsorship from centralized IT. And actually, famously, businesses like Slack, for example, and I'm sure this is true of Zoom as well, though I'll defer to Rob on this, is that increasingly they're getting their foothold in the enterprise bottoms up rather than top down. So a lot of these companies are having great success in establishing the footprint in the business through individual licenses, and then using that data to go to IT and say, hey, were you aware that you have 2,000 people, furtively collaborating on Slack in your enterprise? And would this be a good time to talk about an enterprise license? And so those two things combined, I think, are really changing the way enterprise SaaS is purchased, and therefore the way in which it's designed and priced and rolled out.
Fantastic. Well, Rob, moving to you. Obviously, we're all doing this call on Zoom, so your business has transformed the way we all do our daily work, which is really amazing. And obviously, over the past 18 months since the beginning of the pandemic, Zoom has seen unprecedented growth as companies around the world work from home, stop traveling, and work from Zoom. Now, how do you see this changing as companies in some markets? We're already seeing in the US and Europe, a lot of companies are trying to return to some kind of normal and bring people back to the office. So how do you see this evolving over the next year, next 2 years, as companies in the US, Europe, and then eventually companies in Asia follow suit and bring people back to the office?
Yeah, thanks, Jim. And like Tom and yourself, it's great to be here and share some little bit of background around Zoom and what we see as the path moving forward. So I guess what you touched on is it's going to become a phrase that's going to be coined regularly, if it hasn't already, around hybrid work. And what does that look like in the new normal post-pandemic? And what will that new normal be? I mean, as you mentioned, there are different markets that are in different stages of post-lockdown, potentially moving back into an office-based environment, but in what capacity is really unknown in any market. Each government has different strangleholds around what is required from a restriction perspective. But what will be the case in almost every market, and based on what we're hearing and learning from our customers, is hybrid working will be the way forward. So from a Zoom perspective, we need to make sure that we stick to our mantra of delivering happiness to our customers. Tom touched on a good point around the fact that there's a lot of enterprise solutions that are being consumerized, and that's because of the frictionless type of environment that Zoom can provide as one example. So it's as easy to use for a 5-year-old as it would be for a 100-year-old. And that sort of saw the boon of what Zoom became over the course of the pandemic. Now, back to your question of moving post-pandemic and what a hybrid world looks like. Zoom is definitely going to be looking to play a role in all of our customers' lives in that hybrid world. So making sure that we are there to support all of our customers' needs in a hybrid setting, whether that is 2, 3, 4 days a week working from home whilst the alternative in the office. But similarly, that it's a platform that's leveraged for all workers, not just knowledge workers as we are talking on this, but also frontline workers, health workers and the like, to make sure that there's an ability for them to continue to communicate and collaborate as they have over the last 2 years. But for me, I mean, the pandemic itself obviously brought Zoom front and center. But what it has also done is been able to create a lot of startup-based mentality around what type of collaboration can be done by way of integrating the likes of a Zoom or similar into the platforms of these startups. We're hearing a lot about health tech, edu-tech, e-com, logistics, so on and so forth. So for me, it's more about, how does Zoom align itself to this new normal? It needs to support its customers, be that through a hybrid working model or be that through just engaging all of our frontline customers as we move forward.
Yeah, no, I think engaging in, we are all adapting to how we engage with our customers, our clients, whether they're big companies or individuals, and certainly Zoom has been an important part of that for all of us. And so I think we're all still trying to figure out what this world's going to look like eventually, but it feels like this is this virtual meeting format is certainly here to stay, even in an office format. So Tom, Stripe is obviously a European-based company, but you're working out here in Asia. So I'm sure that you've seen the way lots of SaaS businesses behave in different markets. What are some of the biggest differences that you have seen with SaaS businesses in Southeast Asia compared to what you've seen in other parts of the world?
Yeah, it's a really interesting topic, Jim. I think there's some obvious things around localization of product and regulatory and compliance environment in different markets. And I think that we talk about APAC as a rubric for a very complex and diverse part of the world. And so I think that it's increasingly important that SaaS companies, particularly those coming from European or US origins, are very humble and very adaptable to how they think about making their products and the way they communicate about their products and architect their products relevant to local markets. I think that one of the really interesting characteristics of the Southeast Asian economy in particular is the predominance of kind of SMB clients in the market, and particularly in markets like Indonesia, Malaysia, to some extent Singapore, and Vietnam. You're seeing the rise of these kind of platform-based behemoth mega apps where you have the likes of the Tokopedias or the Lazadas or the Grabs that are able to offer a very wide variety of services to an increasingly kind of digitally oriented young, I guess, like consumer base. And you're seeing this interesting centralization in themes like e-commerce or transportation or food delivery and so forth, in a way that it's actually rather more fragmented in the US and in Europe and other markets. You're seeing the rise of some real behemoths which have been very successful about translating their business cross-market. So I think that for businesses like Stripe and like many others, that presents a great opportunity to the extent that we're able to offer cross-border services that make it easy for businesses to expand internationally and move into new markets over time. John Pollison, one of the founders of John and Patrick, the founders of Stripe, often talk about how building payments infrastructure is a long-term process, and it's not something that's easily replicable. And so, one of the things that we try to focus on is helping users who may be born in Indonesia or born in Vietnam to go to the world, and starting with the rest of Southeast Asia. And I think that's becoming increasingly important. So yeah, that's a big opportunity for Stripe, and certainly something that we're seeing happen all the time.
No, absolutely. The rise of these mega apps is obviously something we're super focused in our business, and in some way, I think when you think about the future of SaaS in Southeast Asia, some of that SaaS is actually coming out of these platforms as well, right? So it's not just consumer aggregation, but also some of the more traditional SME enterprise applications as well. So moving on to Rob, as you are looking at new customers across Southeast Asia, new businesses that you can work with, how much time do you spend with potential SaaS companies, and what are some of the more exciting SaaS companies that you have met in Southeast Asia?
Yeah, look, and great question. And I'll probably come back to, my title is a little bit ambiguous around head of new markets. So just as I guess, unwrap that a little bit, the team that I manage has, I guess, two core responsibilities. One end of the segment is the digital native. So that's startup ecosystem, everything from early stage startup through to late stage startup, and the role that Zoom can play there, which I'll touch on in a second. The other component that my team looks after is the large enterprise. And that might seem odd to many that I've got a digital native focus and a large enterprise, but they actually play a role to one another. So as we support the digital native organizations, most of which are SaaS-based organizations, it's determining how and where we can partner with them, and to support them as they grow, as they intend to grow and scale, by introducing them into the large enterprise segment. So really sort of meshing that together. Now, as I think about, let's call it the digital native, the startup ecosystem, the SaaS companies in Southeast Asia, the role that Zoom can play is really across three pillars. It's the traditional utilization of the Zoom solutions for their own operations. So whether that's like we're doing now, the meeting and collaboration, which everyone knows, but there's also Zoom Rooms and the ability, as we think about the hybrid work setup, how can we set up meeting room infrastructure leveraging Zoom technology that allows us to talk to anyone on a much more frictionless and easy to set up scale. And then of course there's Zoom Phone, which is cloud PBX. So really providing, I guess, all of those collaboration requirements into a single offering. So that's our traditional business, and we'll continue to do that with digital native. The second pillar that we're looking to do is around allowing those organizations to leverage our APIs and SDKs to embed and or integrate the Zoom technology into their platform. And as we, spruik our mantra around delivering happiness to our customers, the next extension to that is ensuring that our partners too can deliver happiness to theirs. So, by leveraging our SDKs, these organizations have the ability to embed the Zoom video platform architecture scale into their platform and their go-to-market to provide, I guess, a video collaboration service to their end customers. And as we think about some of the SaaS companies that sit across Southeast Asia, A lot of them in the e-commerce space, and Tom mentioned a couple of them, whether that be Tokopedia, Bukalapak and others. Do we think about how they can differentiate their offering? Could they look to integrate a Zoom-based platform, potentially white labeled, into their e-commerce platform that provides a service for their customers and or merchants to talk back into their organisation of Bukalapak or Tokopedia or others, or talk to the merchants themselves, merchant to customer. So for us, it's really making sure that we can support the scale of these organisations, leveraging our scale and our solutions and our platforms, but also being there to support them in any means possible. You're on mute, Jim.
No, I saw that. No, certainly that's super exciting as we think about being able to embed collaboration tools into the apps that we use all day and every day. I think it'll change the way we interact with our teammates and our colleagues and our friends, and even the guy down the street who I'm ordering my lunch from. So Tom, what is one of the biggest challenges that your customers face in digital payments that can be solved in SaaS, can be solved using SaaS in a way that it couldn't be solved using more traditional solutions?
Yeah, that's a really interesting question. I guess there's a couple of parts to that. One of which is the kind of problems our SaaS customers are facing themselves. Obviously, the SaaS business model is highly effective at generating cash, and famously so, on the basis that recurring revenue models tend to accumulate very quickly to become very significant businesses as they scale. But those businesses themselves, that business model can only be as successful as your ability to collect those payments. And one of the things that we're seeing is that I think 59% of CTOs in a recent survey that Stripe ran identified scaling their infrastructure as their biggest challenge. And quite often you see SaaS businesses establish themselves with a kind of a custom architecture and some hard-coded billing tech capability to get going. And then over time, when they start to scale up to tens of thousands, hundreds of thousands, millions of users, that can start to break very quickly. And so things like Stripe Billing, which we've introduced recently to help businesses manage subscription-based payments in a very easy and effortless way, can play a big role in helping to boost, I guess, like the ability for businesses to collect revenue, which is obviously the lifeblood of their business. I think also just at the point of signing up to these services, there's some very, very scary statistics around. I think 95% of all checkouts that Stripe surveyed in a recent survey that we did identified some basic errors in terms of the checkout workflow, which resulted in drop-off of conversion, and things like like in line with the kind of challenges that the CTOs identified. It's not just about scaling infrastructure, but also about making the conversion optimal for the users themselves once they actually get to your site and intend to purchase. And so we're really running kind of machine learning and using the millions of data points that Stripe has to do something called smart retries, where basically if a payment is declined by a user, which could result in a loss of hundreds, thousands, tens of thousands of dollars in lifetime value from a customer, we are choosing optimal moments to go back and retry that payment on behalf of the customer to make sure that goes through. And so we're basically really on a very kind of focused mission to try and help SaaS businesses in that particular vertical to collect more revenue and to be more effective at converting interested users when it gets to the point of checkout.
No, that's fantastic. I think one of the most difficult challenges for every startup is to scale to be a large cap. And I think being able to deploy the scalable cloud platform like this to help them manage payments across the full spectrum is entirely game changing. So why don't we have one more question, and then I'll move to some questions from the audience, as I am seeing in Hublot a list of questions coming in. So Rob, last question for you from me. What anecdotes do you get from customers in some really interesting ways that virtual meetings are changing the way they run their business?
Geez, that's a great question. It's more so, it's not necessarily an anecdote that I'll come back to you with. It's more so the thankfulness that we receive in regards to supporting how they've been able to navigate the pandemic, the situation of being, whether it be in lockdown, working from home model. So I mean, yes, there's many other players in the video collaboration space, but for what I've already shared around the Zoom platform, the ease of use, the ability for it to scale for those organizations and to do so at pace is something that I hear regularly from the customers that I'm engaging around, just, you know, how thankful they are that Zoom was available for them to really support them through, you know, what's transpired with the pandemic. But just on that, I'll finish that question with a humorous anecdote, in the sense of when I finished my previous answer and you were talking on mute, which has obviously become a very common theme for pretty much every Zoom call that anyone's been on, that someone will try and communicate on mute, that it's been definitely a phrase that's been coined across Zoom, and you can actually get some Zoom swag. And I've got a shirt myself that says "You're on mute" across here. So it's something that is taken up very quickly across the Zoom employees at the moment.
Fantastic. We'll have to start buying some of those shirts for our meetings, because clearly this is something that certainly happens all the time. All right. Well, look, pulling up the app here. Why don't I go through just a couple of the questions that have come in from the audience. So the first one, and it's not addressed to anybody in particular, so I guess we can do it game show style. Whoever chimes in first can answer the question. So how do you keep customer acquisition costs low while looking for ways to increase the customer lifetime value?
Wow. Tom, do you want to take first stab at this one?
A collaborative game show.
Yeah, a collaborative game show. Yeah, so there's probably two ways of answering that question. One of which is related to, you know, Stripe specifically and how we do that, and then other would be more specifically directed as like SaaS companies in general, and how do they focus on keeping customer acquisition costs low. So I think, you know, given the audience for this session, I'm certainly happy to speak to my Stripe experience, but I think it's probably more instructive to spend a bit of time on SaaS businesses in general, how to maximize LTV, how to reduce the cost of acquiring a customer in the first place. I think the first thing that's really important about keeping customer acquisition cost low, that CAC metric low, is essentially building in viral loops into your products. And so if you Google viral loops, if it's not a concept you're familiar with, it's a really fascinating discipline within SaaS around how do you get people who kind of like, dare I say it, and to drop the kind of coronavirus word into the Zoom, kind of like coronavirus has an R number, where the number of people who a single person infects, for want of a slightly better way of describing things. I think that with a SaaS business, there's also a very interesting concept called viral loops, where the idea is, if I happen to be let's say a DocuSign user, how many more people do I bring onto DocuSign by virtue of me being a DocuSign user? And there are certain ways in which you can increase the conversion rate of me as an existing user and how I spread that to other people. So for reference, like one of the really interesting writers on this topic is a guy called Andrew Chen, who's a general partner at Andreessen Horowitz, who was previously in growth at Uber, and does some really fascinating writing around different businesses and how they've managed to kind of hack the viral loop methodology of growing acquisition. There's also a really interesting article on MailChimp recently about how MailChimp, as a famously bootstrapped company, recently exited for about $7 billion, I believe, went about building viral loops into its product, so that, for example, they had a free forever product, and you know, in every email that was sent out by MailChimp on the free forever product, there'd be a digital billboard at the bottom which said "sent by MailChimp." And then, you know, that was essentially free advertising to hundreds of millions of people who were getting emails sent through this means. There's also incentives. So, you know, famously, if you use an Uber Eats or something similar, you have the ability to save, let's say, $15 if you sign up a friend and so forth. And those are very effective ways of getting, you know, 3, 4, 5 other people in your network to sign up to the product themselves. And then finally, there's ways of architecting the product that can be very powerful. So there are certain products on the market in the SaaS world that have a dependency on others using the product to be successful. So for example, let's say like a Figma or an InVision, where I used to work, which are kind of collaborative design tools. It's all very well you downloading InVision and building a prototype on InVision, but if you don't have anyone to share that with and collaborate on that with, then the utility of the platform is relatively low. And so there's a lot of ways in which you can reduce your customer acquisition by either through incentives or the way you market or the way you architect your product. You can bring that cost of acquisition down.
I think.
Now, Jim,
go ahead, Rob.
having heard Tom, I just wanted to sort of address that similar question from a Zoom perspective. And I mean, Eric Yuan, our founder and CEO, really talks to this well. And I've mentioned it a couple of times around the mission within Zoom being delivering happiness. Now, if you break that down, it means making sure that your solution is easy to use and the customers like using, you know, in comparison to potentially the alternative. Because by doing so, the word of mouth, on a very simplistic term, like Tom has referenced, is what's going to support a very low cost of acquisition. Because you look at the way in which Zoom handled the pandemic, it was predominantly word of mouth that went through the market in regards to the ease of use, you know, how it was then used. There was many use cases for Zoom through the process of the pandemic that we just did not forecast. But again, it was just about how simple the platform was to use, and it brought everyone to use that platform for the requirements that they had.
Fantastic. No, I think the lessons on LTV are certainly something that everybody in the audience can use, and certainly I'll add Andrew Chen to my reading list, because it's always important to understand how to build viral loops. So back to the audience question list. On to question number 2. Oh, sorry, no, that was question number 2. Let me go back to question number 1. I think I'd skipped 2 because question number 1 is long. So this person says, I'd be keen to understand your thoughts on infrastructure and cloud adoption in the SaaS world. In particular, with the current digital era, how comfortable are new business owners in adopting to cloud, and could you touch upon markets that have a high growth rate in digital adoption? So I think there's a few themes there. So one on just broad cloud adoption for in SaaS across Asia, and then how new business owners are sort of open to the cloud, and then finally what markets are growing the fastest.
Rob,
Tom, do you want me to take first at this time?
Sure. Yeah, let's go to you first.
Yeah, look, I mean, I don't think it's a surprise that companies need to be early adopters of new technology in order to stay competitive, in order to attract talent, and in order to lower costs and redeploy a lot of their resources into more, I guess, business critical measures. So I guess coming off the back of that, what we are seeing, especially through Southeast Asia, as we are in Australia and New Zealand, is a significant cloud adoption rate, whether that be through the startup community all the way up to large enterprise. So I don't have the exact statistics to mind, but a lot of the markets within Southeast Asia and Australia and New Zealand actually lead the globe in regards to cloud adoption. What that then tells me is that they're looking to deploy resources and assets into more business critical measures, more so than whether it be infrastructure and legacy investments in that regard. But Tom, I'll hand to you in case you do have the statistics to hand to talk to.
Yeah, I don't. But what I will say anecdotally is that I think that there's a really interesting thing happening in SaaS and technology in general, and particularly in Asia Pacific now, where we're kind of skipping a generation in terms of our ability to create new companies. So if you think about products like Webflow, which is famously kind of a no-code platform for building websites, think about products like Stripe, which allow you to basically, by sharing a link, to receive payment from somebody. There's a huge Figma on the design side. Like, there's a huge range of tools now that are starting to develop that allow people to start a business without being particularly technical. Like, you can build a pretty sophisticated e-commerce presence or retail business online or whatever it might be, and not really be a coder yourself. And there's still challenges with that. Like, I'm not saying it's easy, but it's becoming a hell of a lot easier than it was 2 or 3 years ago. And at the heart of that revolution, really, which is making it a very, very good time to be a founder and to start a company, is the broad availability of cloud-based infrastructure for you to build on top of. So there's a reason why I think, in I don't know, like across the 500 fastest growing startups, the average outgoings of those companies is something in the region of, I think, 30 to 40% to AWS. Like, it's pretty incredible what their business model is, and others like them. So there's a really interesting kind of trend emerging where the no-code revolution is starting to make it incredibly accessible to start a company and make us scale a successful company. And I think that it's one thing for an enterprise, say, financial services organization that's highly regulated and dealing with incredibly sensitive, PII to be resistant to moving to the cloud. But I think it's very difficult to imagine a world 10 years from now, and maybe we're even into the kind of a serverless world, and we're in a post-cloud world by that point. But it's very difficult to imagine a world in which we're going back in the other direction. I think that for those starting a company today, one of the biggest limitations is, well, I need a technical co-founder, and I think that will be the case for some time to come, to be clear. But I think it's becoming less and less important that you have somebody who's deeply, deeply technical to start a successful company than it was 5 years ago, and that's largely enabled by, shared resources on the cloud through Google Cloud, Azure, AWS, etc.
Definitely, I think it's hard to see us going back on many things, right? But I think certainly tech digitization of new companies is certainly at the top of that list. And the third question from the audience. So many, all SaaS teams, all SaaS startups, when they're starting, are always really enthusiastic about the core feature of their app. But where many of them tend to fall short is delivering the supporting services. This can be onboarding, customer support, billing, etc. What advice would you have for startup founders to help them avoid these pitfalls of missing the execution details while staying focused on the core functionality?
Yeah, I'm happy to take that one first. I think I will borrow a genius rather than originate genius by quoting Jason Levkin, who's famously known as the godfather of SaaS. He started what is now Adobe Sign, I think was Echo Sign at the time, and then sold that to Adobe. And he's very widely read on SaaS business models. He's got a fantastic Quora channel if anyone's interested in that. And he's famous for kind of talking about the importance of investing early in customer success, and actually in parallel with your early sales hires, you should be hiring kind of one-to-one in the first instance in customer success, because the way that you build it's certainly in enterprise, it's slightly different in consumer, but in enterprise, the way you build a successful SaaS business is to have highly referenceable, successful early adopter customers who then go and you can go and reference and introduce to prospects later on, who will say good things about the experience of working with your company and give people confidence that as a new market entrant that you can be trusted and relied upon. And I think that a customer success team is not, a panacea. Obviously, one person can only do so much. There also needs to be a culture of, effortless onboarding and, user insight and so forth built into the way the product itself is architected and rolled out, and the way the functionality and roadmap is prioritized. But it certainly helps in the early days to make an outsized investment to an extent that maybe feels uncomfortable for a lot of founders in customer success in the beginning. I've seen numerous instances of that paying dividends in a very meaningful way, and I strongly recommend Jason Levkin on this topic, because he's very clear-eyed about the benefits that it provided to him and to others who he's invested in.
I'll build on that, Tom, because I largely agree with you, but I think the best, at least from my perspective, and of course I'm coming from a biased opinion, Eric Yuan, when founding Zoom, had the best approach to ensuring that he was providing a solution that was easy to use. For those that are unfamiliar with his background, he spent 17 years with WebEx. WebEx obviously then got acquired by Cisco. He became a little bit disenfranchised with the direction that WebEx was going because of the customer experience, and knew that he could do perform a much better platform that would be best used for customer experience. So coming back to the point of building out a solution or a SaaS model that is very simple to use, very easy to adopt, but also provides the value that comes off the back of it, are the measures that need to be focused upon, because it comes back to simplicity and flexibility and scalability of any SaaS offering for it to become, center to any organization's requirements or any end user's requirements. Because if it's not, customers will quickly turn off, and they'll go to other models that provide exactly what they're looking for.
All right, fantastic. Well, let me see how we're doing. We have only 1 minute left, so I think we will skip the last couple of questions. And Rob and Tom, thanks very much. I think it's been a really engaging discussion. I think you've passed on a lot of great wisdom for SaaS founders and for really all founders who need to implement SaaS into their business. And let me just quickly summarize a few key points in the notes that I took from your conversations. But in the future, we see a future of hybrid work. Today, it's work from home. It used to be work all from the office and travel. But the future is going to be all about hybrid work with collaboration embedded everywhere to the apps that you use every day. That the rise in Asia of platform-based mega apps are driving centralization versus fragmentation, which that we've seen in developed markets, which is impacting B2B businesses and SaaS businesses as well as consumer businesses. The best way to scale your small cap into a large cap, your startup into a big company, is by using cloud solutions, and things such as cloud payments help you to get there. Building viral loops is one of the best ways to return to grow LTV in your SaaS business. You can read more about that from Andrew Chen. Being an early adopter of tech helps keep small businesses ahead of the curve, and the importance of investing early in customer success really is one of the things that will keep SaaS founders engaging their customers back again and again. And again, a reference from Jason Levkin, the godfather of SaaS, for reading more of this. And I guess maybe we'll end this with Rob's quote of, you're on mute. So thank you very much, everybody. It's been a great session, and I think we are now out of time.
Thank you all.